So welcome everyone tonight. Today we're going to be talking about the Bank of Canada meeting that happened today. The introduction, my name is Carmelo Bautista. I'm a mortgage agent at yourmortgageyourway.ca. Find me on Instagram or send me an email at carmelomortgage@gmail.com.
Yeah. I'm Alex Vinieski, Toronto Realtor with Remax Condos Plus. I have a QR code there that goes to my link tree. All my socials are there. You can easily just Google my name and find me on Instagram or TikTok or any of those platforms.
So to begin today, obviously the Bank of Canada had a meeting, and what happened? Well, Tim McAcklin, the last two meetings he did a 0.5% rate cut. Today, all he could do is 0.25%.
I don't think we ever had 3 0.5% rate cuts in a row. Like, I don't know. Like, I know, like in the last 30 years, for sure, we never had that.
I can tell you, Mike, 3 0.5%. I don't remember seeing 3 0.5%.
Yeah.
So the fact that we got two, even the last two that we had, surprised me. I knew we were going to get cuts, but the last two being 0.5% were quite large. Today, the 0.25% was to be expected, but also with a lot of uncertainty in front of us, we'll talk about that. But it's just kind of like it was just today his hands were tied, right? And some of the things that I got out of today's announcement was, again, like, this is a little clip I cut and paste with regards to from some media sources I got. Like the one thing the Bank of Canada said, Alex, was they're deleting future guidance to future rate cuts. There's too much uncertainty. There's going to be policy changes. Now we're going to depend on the trade penalties Trump throws at us and how the bank sees growth and inflation evolving as a result. Like, the Bank of Canada already lowered the rate by 2%. That's a big amount. So I found that quite interesting.
What do you mean by the leading guidance? Can you just emphasize on that a little bit? Like what?
So typically, the Bank of Canada would guide. Okay, this is where the economy is. This is when inflation was going up, we see inflation going up, and how fast it's going up. And then as it's been coming down, it's like they're guiding. Okay, we see inflation coming down to levels that are appropriate, and they look at the unemployment rate and the Canadian GDP. Like, they kind of guide like where our economy is going and how we're doing as a country economically. Now,
so they have these kind of like measuring factors that they usually base a decision on, and what now they're saying that all of that is out the window.
They can't guide where the economy is going to go. There's way too much uncertainty because there's going to be this Trump tariff trade war.
Mm-hmm.
How could you provide guidance with something where we don't know what's going to happen? The guidance will automatically change the day there's a tariff.
Right.
So you can't really guide the country with regards to economically how we're going to do if there's tariffs, right? And he also, he recognizes that tariffs would increase inflation, and he recognizes it would be temporary. He said the word temporary versus transitory, which a lot of bank governors from Canada, US, and around the world use that word transitory when COVID was over, everything was opening up, and when inflation was going up, which for me, it doesn't mean anything. Changing words, temporary versus transitory. The fact is, the fact that they won't give future guidance, I find important, and for good reason. There's a lot of uncertainty. So once the Bank of Canada had a meeting, like, Alex, I'm telling you, every meeting, within the first 5 minutes, I got like 3 texts and a phone call, like 5 minutes. And all day today, I'm just like,
is it people asking them about their fixed rate mortgage?
Mortgage renewals, current mortgage we're working on, people looking to buy, right? So
yeah.
The key thing is this. I want to kind of first share with regards, like, this is the Bank of Canada, the overnight lending rate. Also, we call it prime. How it's dropped over the past, let's call it a year and a month. Like, we went down 2%, which is a nice, healthy balance.
Mm-hmm.
Right? It's a steady eddy. It's coming down.
Right. Now, the prime rate is different from this, though, right?
Well, I've been used every time I talk about the Bank of Canada. I'm just going to call it the prime rate. It's called overnight lending rate. That's what the banks, how the banks lend to consumers. they obviously they get a premium from it, right? There's a difference of 2.2, and that's what the banks use, whether it's at any bank you're looking to borrow money from. When you're getting a variable rate mortgage or variable rate loan or line of credit, it's based on their prime. So when the Bank of Canada changes that prime rate, tomorrow everyone who has a variable rate mortgage, a home equity line of credit, an unsecured line of credit that's based on a variable rate, or a variable rate loan, their interest rate will go down by 0.25%.
Looking forward to that.
So am I.
But it's not instant, right? It's going to usually be like if somebody has a variable rate mortgage, it's going to take like a month or two for them to actually see the new rate.
No, the rate actually begins tomorrow, Alex. So that means that next payment, more is going towards principal than interest.
Nice.
Because for the number of days remaining from that starting tomorrow to that payment date, it's going to be at the lower rate. The banks prorate it from that date on to the payment date of how much interest you're paying. That you may not see the payment change till the following payment, but the amount of interest you're paying is going to be based on, like tomorrow, it's going to go down by a quarter.
Nice.
Anybody who wants a fixed rate mortgage, and most Canadians get 5-year fixed rate mortgages. Fixed rate mortgages are based on the 5-year Canadian bond yield. And Alex, I took a longer graph with regards to like what happened over the last 13 months. And you can see, unlike the variable rate, it's not a steady Eddie decline all over the place.
Yeah, it's quite volatile.
So, so when you're looking to get a fixed rate mortgage, the Bank of Canada, like that, impacts variable rate. The bond yields impact fixed rate. So let's kind of overlap them together. What happened? So when you overlap the two, you can see the beginning of last year, first, we'll call it 6 months, the Bank of Canada did not make any changes. However, we began the year, on the bottom left, just around 3.25. And for the first 6 months, we were going up, Alex, until we saw inflation really coming down. And then you kind of see like the fixed rate would kind of like anticipate future declines in the Bank of Canada overnight lending rate. That worked for the first, say, June till September, until there was a better chance that Trump coming into the office, and then we started going the other way around. It really got really choppy. So as the Bank of Canada changes that overnight, that prime rate, you're borrowing money, whether it's a loan, car loan, mortgage loan, the interest rate you're going to receive, if it's a fixed rate, it's not going to come. It hasn't really changed that much over the past 13 months.
It does seem though that it's kind of still in that same range though. Like if you look at the I'm just gonna let this person in. As you look at the bond yields from like, I guess this is August until March, until February, like it's going up and down a little bit, but it's like it's not like some crazy jumps. It's not going to like 4.8 and then coming down to 3.2. Like it's like just kind of correlating, but it's not flat like this.
We're in a band that we're definitely, we've seen kind of like a bottom, not always at the same, and how high it's going, it's not really going that much higher, right? Right now, again, I think a lot of it is just kind of what's going to happen with these trade wars and the economy, because as we see both the Bank of Canada lowered it, fixed rates, let's call it, went sideways with a slight decrease over the last 13 months. What's happened? One, inflation in Canada has come down, which is great news. So inflation was the reason why the government and the Bank of Canada had to lower that prime rate. Now it's come down. So hopefully we could stop talking about inflation.
And inflation is basically just how expensive things are, right?
Well, how the prices of a basket of goods change year over year. But the other thing that's more concerning, Alex, is we all want rates to come down, but for rates to come down, that means unemployment's got to come up. People are losing their jobs, and this is a concern, right? I don't want, if people aren't working, they're not earning money, then they don't have means to make their payments, their rent, their mortgage, their car loans. So the more people that become unemployed, it's a bad thing for the economy. Now, if the economy gets really bad and we go into recession, which I personally think we're in, then that's one reason why we're lowering rates. It was a surprise last month how the unemployment went down a little bit, but again, it's just 1 month. Like in August, it went down a little bit. Like so, nothing's ever a straight line up or a straight line down.
Yeah.
But the fact that unemployment in Canada is at 6.7, it's pretty high.
Guess the reason we're not in an inflation is just because of the high immigration numbers. Sorry,
Well,
recession. We're not in a recession. Sorry.
In a recession because of the immigration numbers.
Well, because there's more people that are coming that are still people are still working.
Yes.
Yeah.
People are like historically going back. I remember when I studied economics back in university, like 6.7 actually is a good unemployment rate for Canada, but obviously the economy's changed over the past 25 years, right? So, 6.7, we're not that high, Alex, but we're definitely not low, right? I would think we're more getting close to that upper band.
I mean, this chart, by the way, is only like from 5.8 to 6.8. Like, it's not like, when you go to 2024, it looks like really low. It's not like it's at zero. It's still at like 5.5. So
true, but there was a time I remember, like shortly after 2024, like shortly after that COVID, and people couldn't find employees to do just regular jobs.
Yeah, I remember that.
Right. So unemployment then was like it was just too low because their jobs are available, but everyone's working.
Mm-hmm.
So really, this is kind of like where we are now. It's like, what's going to happen next? Because there's a lot of uncertainty. Interesting thing today was the same day, just by chance, the U.S. Federal Reserve, Jerome Powell, had an announcement, and they didn't make any changes. And the news they got was ask people to rate drop in July. So the United States, they may not even make any changes in their prime rate till June, maybe July this year. Like their economy is going gangbusters.
Yeah. Well, I don't. It's all over the place, man. Because I heard that I thought Trump was going to make them lower rates. But it seems like it's just like it's like a new thing with this guy every day or every hour, every time. Yeah.
Trump is again. He's gonna bring a lot of excitement. He likes attention. He actually has he shouldn't have no influence, and he's the one who can't decide to oversee Jerome Powell and the Bank of the U.S. the Federal Reserve when it comes to interest rates. Now, Trump is proposing taxes: 25% to Canada, 20% to Mexico, 10% to China, 10% to Europe. Like he's just throwing these accusations everywhere, right? And this is why the Bank of Canada can't make any forecast. Like, what's going to happen? Yeah. There's going to be a pendulum that swings, and so what's going to happen next? It's kind of, especially today, it's hard to say. Like, there will be trade negotiations in the next, I'm going to call it 6 months. Starting as soon as maybe even this week, February 1st. But we'll see, right? He could push that date out to a future date and it just leave uncertainty.
Yeah.
But the one thing I want to look at is more historically. Like this is not our first time. We're first time dealing with Trump.
Mm-hmm.
So historically, I looked at what's happened over the last 10 years. I got the blue line is the Bank of Canada prime rate. The gray line is the 5-year bond yield. And the one thing that I've known in my career is that historically, the variable rate is lower than a fixed rate. It comes with more risk because they can change up or down. But they're historically lower, and it kind of shows here. We've had many, many years where that blue line was under the gray line, and now we're back into that position. So one thing I see that's happening is I'll say for the next 12 months is I anticipate more Bank of Canada rate cuts, whether it's 0.25% or another full percent by the end of the year. That I don't know. But bond yields and the 5-year rates for, car loans or personal loans or mortgages may not be coming down by the same proportion. They will come down, but just maybe not by the same proportion as what the Bank of Canada does. So this is, have you, I guess, your time in real estate, Alex, I know it's, I've been doing mortgages a little longer than you've been doing your real estate, but what have you, with regards to your career investing in real estate and having mortgages, with regards to variable and fixes, variable rate mortgages and fixed rate mortgages?
I mean, I know definitely fixed rate mortgages are the more popular product. Myself, I've had mainly fixed rate mortgages until, very recently. But I think now it kind of makes sense. Like, it seems like variable rate mortgages are definitely like the way to go now. Or if somebody's renewing maybe like a shorter term fixed mortgage, like a 2-year fix, something like that.
Yeah, what I've been guiding for the last, say, 6 months is, I've been advocating a lot more to variable and understanding why my consumers would take the fixed. Now more than ever, because the variable rate is pretty much equivalent to what you could get for a fixed rate at the end number. The variable rate mortgage is the only mortgage where at any point in time, if you want to switch it to fixed, Alex, you can. So taking a variable rate, knowing that there'll be further cuts, the fixed rates may not come down by that same amount, but you could then lock it in when you see a more attractive fixed rate than what's available today.
Yeah, it looks like they're pretty similar, right? Like, I think fixed rates are like in the mid 4s, probably mid to high 4s, right?
Yeah, they vary. Like, if you have a CMHC insured mortgages, you're getting fixed rates in the low 4s. If you're refinancing and your credit is okay, you're refinancing your mortgage, you're going to be into the, 4 and 2, like 4 3/4. You could get maybe 4.65. Like, it's in the upper 4s. Let's just call it, right, instead of the lower 4s. Versus variable right now, you're looking at give or take 4.5 plus or minus.
Yeah.
Right.
They're all very similar, but that flexibility to get out of it and go into a fixed mortgage when it makes sense. Well, not get out of it. You're still going to be with the same lender, but I mean, just like be able to switch, like that flexibility is great.
Now that the rates are the same, like 6 months ago, when there was 2% higher, it's kind of hard to, even myself to understand, like, hey, you take a rate that's much higher than a fixed rate, waiting for it to come down. Now we're down.
Yeah, so, I was in that situation too, right? Like, I was renewing. I had a couple of like renewals happen, and I was like, really, but you had to kind of just like see what was happening and understand the trend. And now I think it's a better situation than. If I'm glad I didn't go with a fixed rate like in September or August.
Yeah. Thanks for listen to my advice, and I guess understanding, the benefits with regards to now, there's going to be a point, and it's hindsight's 2020, where there's going to be nothing wrong with those who are going to want to in the next 6 months as the market changes to lock that rate in. Right? So. That's what I really want to share with regards to, the Bank of Canada meeting tonight. And I kind of like to leave some time for our guests to kind of ask questions.